Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
Today's very special guest is AdaPia Dorico. Thank you so much for joining us today. Thank you. I was just going to say it's Michael and Susie, so it could just be AdaPia, and then that's pretty easy.
Absolutely.
Yeah. But thanks for having me. Yeah, we are super, super excited. And it's kind of fun because I read your book, Productive Intuition, and I actually read it during COVID, which was perfect timing for me because we had moved over to the UK. And then, for me, actually, I moved in January and then we shut down in March. And so the timing of when your book came into my life, really worked perfectly because it was okay, I'm in this new space. I have to actually think about myself and what I'm doing because it's just me now for a while. Cause over here we were in lockdown for much longer than in the US. So I loved your book. I love that you're here with us today. And just although I was not a part of your life during that time, you were a part of mine. So thank you. Oh my God. Thank you so much. And no, oh my God, that's amazing. I love to hear that. I'm so glad that it helped you in some way. And wow, thank you. I'm humbled. Yeah, absolutely.
Absolutely. Yeah. So for the listeners out there, if you're not watching us on YouTube, go to YouTube, check it out because Adapia also has this really awesome picture that we had a long chat about before this show. But go on YouTube, check out the video, and you'll see this awesome picture she has up. But without further ado, we would love to know more about you, Adapia. Would you mind sharing with our adventurous family a little bit more about your background and why you started investing in real estate?
Sure. And because it's adventurous and you're living abroad and I lived abroad, I'll talk a little bit also maybe about my personal experience because I've had this very zigzag path. I don't know if a lot of people have had a fully linear path, but I know growing up that there was that expectation of a really linear path. So I started working in a bank when I was 18. So I went for it. I was super ambitious. I always understood the importance of money and financial independence for myself, mostly because I didn't want anyone to tell me what to do. I'm 18. I'm I'm going to make so much money that my parents can't tell me what to do. I'm going to do whatever I want. And so that's kind of how it started. But I also really resonated with financial planning. And I just thought that was so interesting and really cool. This idea that my money can make money for me. And I'll circle back around to that in terms of what I'm doing today. But when I was 21, I actually moved to Europe and I kind of engineered a school exchange program with my best friend because we were pretty bored. I was in a fast track financial advisor program. I was probably would have been district manager by the time I was 30 kind of a thing. But my spirit was I just want to do more. I need to do more. I'm Italian. My grandfather traveled all over the world. He would always come to visit us. I just had this travel bug. So I went to Europe. I ended up in Italy for a really long time, which was not a good place for a woman to have a career. And so I ended up struggling a lot, which is really hard for those of us that are really, kind of, ambitious. But eventually I found myself in a hedge fund in Switzerland, which was great. And I kind of got back onto the financial path. So, and I say all of this because my background is proper finance and we don't get taught about real estate. I bought a condo at one point in Canada in 2003 because I knew it was a good thing. I bought another one in 2010 and I was still living in Italy at that point. I was living abroad, but I didn't really get into real estate as an investor until the end of 2013. So in my adventures, I moved to LA in 2012. I got into the venture capital startup scene, very early days, Silicon Beach. People were what? So super early. And I discovered crowdfunding. I was doing crowdfunding for creators at that time. So I knew Kickstarter and I knew Indiegogo and I had launched campaigns on that in a completely other space. And so when I first heard about real estate crowdfunding, I was like, oh my gosh, this is amazing. This actually marries for me something that really makes sense. And I have this radar for what is going to be something really big. And I've always had that. I understand something. And so I went to one of the very first conferences and I met all of the early stage companies. I joined one as their CMO. So I joined this one called Patch of Land. It was a hard money lender. I didn't know anything about real estate investing. I just thought I could crowdfund a house on the canals in Venice, turn it into a co-working space. RESPA doesn't allow you to do what I wanted to do because I didn't know about LLCs. So this whole thing, I'm I think it's just cool. I want to be a part of it.
Yeah.
So I became a part of it, a really big part of it. And that's how I got into real estate investing, which, married my finance background because I was also in investor relations at the hedge fund into this like new space and that light bulb moment of real estate. And I've been in the space since then. Now I'm more on the equity side. I'm a partner at a private equity firm called Alpha Investing. And so we're, real estate private equity. And I invest in all kinds of real estate and syndications personally. So that's how I got my start in real estate.
That's really cool. I love that story. You don't hear it often. And then we would never had anybody on the podcast yet to talk about like real estate crowdfunding. So that's really cool. So are you still actively involved in crowdfunding real estate now?
No. So, and this is interesting. So we can kind of talk about this because real estate crowdfunding, when it came out, when like all these like entrepreneurs and tech people, early and like people like me, I'm an entrepreneur. I'm like, okay, let's go disrupt something. And we were all like, we're going to change real estate. And all these like real estate people, right? And these like old school have been in it for like decades. They're just like, it's called syndication. Anything different, right?
Yeah.
Except we were doing two things differently. One was the Jobs Act regulations, which was, Rule 506C, which allowed finally for public solicitation. And then the true crowdfunding regs, which are Reg CF and Reg A, which didn't come for many years later. But what we did usher in, which has really permeated throughout, all of real estate investing, is the use of the internet for marketing. So if you were to ask me about crowdfunding today, it's real like on the real estate side, it's really just that marketing got entrenched in the way that real estate investors do business. That's how I think about it. Because the 506B was always around, like Reg D was always around. So nothing like that has changed. I don't like Alpha Investing is a private equity firm. So, and we're a 506B, and we don't actually do that much marketing, but, we're not crowdfunding per se. Like, we're actually really focused on a small segment of investors. Whereas, like, some of the bigger crowdfunding companies, let's say like a Realty Mogul or a Fundrise, they've also become real estate companies. And crowdfunding is more of a marketing campaign at this point in time. And you have the crowdfunders, and they have like tens of thousands of people on their email list, and it's more of a numbers game. That's how I think about it, having been in the industry for a really long time. And the evolution for those firms that have remained, because a lot fell away, they had to become real estate companies because there is no tech multiple. Real estate, you can't, you can automate some things around lending, around loans, because you can automate factors and like it, you can actually make that a little more automated. You cannot automate away the underwriting that goes into, an equity project, for example.
Right. Absolutely. So I have a question around crowdfunding again.
Yeah.
And just because it's really interesting to me, and I've actually never really thought about this, but I mean, one of the benefits of investing in a syndication is that you get to take advantage of like the cost segregation, the tax depreciation, things like that. But when you invest in like a REIT, don't, because it's like
Mhm.
basically like stock market, right?
Yeah.
But with crowdfunding, do you know, I don't know if you can answer this. Do you get to take advantage of like depreciation, things like that?
It depends on how they're structured. So a lot of the crowdfunding companies have REITs,
Oh,
because they're called E-REITs, and so they've done it that way. So in their E-REITs, no, because they've taken the REIT structure, but some of them also still have like a straight 506C syndication, and in that case, it should be a pass through just like every other syndication. It really depends on the legal structure that they've taken. If it's a REIT, definitely no. If it's like an individual private placement type of syndication, then I think it should, unless they do something differently, because we all love those.
yeah.
We all want the depreciation. Like we want the better tax treatment of real estate investing. So the technicalities of it really don't change. It really is that wrapper. That's why I say crowdfunding is more of a marketing term these days than a mechanical one, I
Yeah.
suppose.
That's really cool.
What made you transition over to private equity?
I got burnt out. I got burnt out. Yeah. Like I became really well known in the industry. I was like flying around everywhere. I was like, in a startup was a lot. And like I was in a leadership position. And that was also the time when fintech was really taking off. And I had been going nonstop in my life for a really long time. And I basically I just hit the wall and, like the universe just said, you just got to stop. And so it was in that moment in that stopping moment, because I didn't want to stop because I think stopping is death. I'm just like, I can't stop. Who am I if I stop? Like, I just can't stop. But anything I tried to do was completely unsuccessful. And so I actually had to stop and say, what is going on? And in a almost like instant moment of deep reflection, I think like when we're really brought to our knees, when we're just like, actually asking for help, which is not something I do, then I realized like that I actually really liked being in business because I went through this whole period of thinking that like I didn't want to be in business anymore. Maybe I just wanted to go be a yoga teacher or a coach or something because the burnout took me so far out of that space that I thought I could never go back. And then I just had that moment where I was like, no, I really like business. I love investing. I'm good at it. And I want some good partners. Like I don't want to be solo. I'm not a solopreneur. And 3 days later, Fark, who is my partner at Alpha Investing, he called me and like I had been informally advising them for a couple of years and always really liked them. Small team, really small team. And he basically, over the course of a couple of weeks, basically asked me to join as a partner. And it was amazing. I was like, this is like the stuff that's in books and movies and where you're just like, like shows up. But so it goes. And that's kind of what happened. And so Alpha is, we do syndications, but we don't take the crowdfunding name or methodology. We really take we only have, let's say like 1,000 and 1,200 investors that we work with as opposed to thousands and thousands and thousands. And so we write the sole check, like we write the entire equity piece at, these days. And we have our asset classes that we work in. And so it's not terribly dissimilar, except that we don't use a lot of it's not a numbers game for us. It's a quality over quantity game for us and the way that we work with our operating partners. So the sponsors. So, we are not the GP, we are not the operator. So that's how I got into private equity. In a sense, it's the same business, but I just went from being on a bicycle on fire downhill without brakes, startup life into something like a little more stable.
Stable, relax, chill. Yeah,
Yeah.
absolutely.
So if I know you said it's not really a numbers game, it's like the relationship part. Like, how has everything that's happened in the economy, like in the last couple of months, and what could happen going forward, like kind of changed what Alpha is doing with your, I guess, strategic partners?
Yeah. So one of the things that changed back in the spring when we started to see like the interest rates really like the Fed basically saying, you're all calling our bluff. We're not bluffing. We're going to raise rates. That's what everybody was doing. Like we were all like, no, I mean, the forward curve was calling their bluff. There was no bluff. So what we did is we have different operating partners and they have different strategies. And so we ended up in the span of just a couple months identifying an operating partner that has a strategy that's actually really perfect for this environment, and it works with tax abatements and fixed rate debt with Housing Finance Corp. So it has an affordability component. And so we moved from a high velocity floating rate debt flip strategy with some of our partners because they weren't able to execute on new purchases like that. So that strategy is currently in heavy asset management, stabilizing a little bit, because the rate caps have been hit, et cetera. And then we found this partner here that has this other strategy that's just like down really easy, like really down the middle, nice cash flow, very stable, no value add needed. It's all created on day one. And so that was something we were looking for and we found it at a good time. And so from a perspective of strategically of where we sit with the other assets that we have, like those are, that strategy changes to, we're probably going to have to hold it a little bit longer. So it changes the renovation pace. It changes some things there. And then this strategy is probably something that we're going to continue to do for the foreseeable future also because workforce housing, affordable housing, and not with a capital A. This is 60 to 80% AMI, affordable housing, adjusted
Mm,
median income. So it's really for like your service workers, your teachers, your nurses, you're like, so that people can actually afford rents in certain
yeah.
places. So we really like that strategy. And we also do senior housing, and we do single family rental portfolios, all acquisition, no development. So we are just senior housing. We're starting to see distress. So we do expect a few more acquisitions next year. And then in the single family rental market, that one is also pausing to wait for price discovery, kind of like basically for everyone to just settle. There's a stalemate now. I'm sure you're seeing like sellers don't want to sell at
Yeah.
the prices that buyers want today. They still want their prices from 6 months ago or 2 years ago. So once that all settles, then we'll be able to pick back up maybe new markets where the gross yields are going to be at the targets that we want. So basically prices are going to come down, and then we'll jump back in.
Absolutely. I love that. I was just going to mention something briefly and you can hop in, like just about the whole strategy here. Like since we've acquired properties over the last 2 years, that was one thing that I was very skeptical about what the future held, because I was afraid of something like this happening. And so when Susie and I focused, like from the very beginning, was just like long-term fixed rate stuff, right? So, um, we have 20-year loans on all of our, well, 20 to 15-year loans on all of our apartment complexes, just because like I was very risk adverse and I wanted to make sure I fixed it for a long term and ride out whatever is going to happen. And so that's what we were focusing on, especially workforce stuff as well, and not heavy value add cash flow from day one as well. And that's why we love Oklahoma as well, because you can get it nice steady appreciation over a long period of time, not these hot markets where it goes up and down quickly,
Yeah.
like we were talking about Boise earlier.
Yeah.
So,
Yeah.
but yeah, sorry.
I was just going to ask, like, for somebody who like wants to not be on the same level of, hey, I want to figure out where the economy's going. Like, what should they be like looking at or reading like right now or today?
That's a really good question. And it's a really hard one because there's so many different people and there's so many opinions. And I would say just stay off like Twitter, because that's
Yeah.
that's like the worst place for like different opinions. And especially because, everyone's really emotional right now too. Like the markets are emotional. And I think one of my favorite things about real estate is like with markets like this, I might freak out and sell a stock when I actually should be buying it in that moment, but it's just not what we do.
Right.
Real estate basically protects us from ourselves, because you can't just, oh my God, I'm going to sell it, I'm freaking out. It's like we are our own worst enemies always. And so long-term holds like really stop the sort of like financial child in us from ruining our own future by selling something too early. And so there's like a few places of information that I like to go to. And this is like honestly also it's like the first time in my life, in my adult life, where I have to pay so much attention to the macroeconomic factors. Like I don't think any of us, because even when I was at the hedge fund, like that was different. We didn't have social media and it wasn't so prevalent as it is. It's like it's everywhere. Like you turn on the TV and there's like stock prices. I'm like, why are stock prices rolling around on this like commercial? Like it's not even the news channel. So it's this weird thing that's in our psyche. So I would stay away from all of that. One of my favorite sources is actually a very non-conventional one, and it's property share markets economics. Akil Patel, you should have Akil on. He actually lives in London. They track the 18.6-year real estate cycle. And it's phenomenal. And it's a different form of looking at economics and the way the housing cycle works in roughly 18-year cycles, and it traces back. So I really like to see that perspective and the way that they chart things out. I also find that's contrarian to the whole housing supply issue is Ivy Salmon. She says that we actually are not undersupplied. So that's interesting because that we are. Ivy Zalman, she's a rock star, amazing. I also find when Marcus and Millichap does their webinars with Larry Summers, I really like those. I find him, something about the way he speaks is just like very calm and direct, because so much of this is there's just too much information.
Yeah.
So those are some of my favorite ones. And then the Walker webcast as well, Willie Walker. Like they have good guests on just to get different perspectives. But if somebody wants to like really like nerd out about it, then they would want to be looking at anything and everything about the bond market, because that's actually what's driving things. Everything. That's where it all lives and resides. But it's such a deep dive that even for me, I'm like, I actually am like, I don't really think I understand it fully because it's just so complex. But
Yeah.
the bond market tells us what they expect to happen with interest rates, and of course the relationship between interest rates and real estate. So that would be like the most nerdy, like technical analytical, is study the bond market.
No, thanks for that. Yeah, I love it when I like read something 4 times and I'm like, I really want to get it, you know?
Yeah.
Something in here really tells me that I should, because I read it 4 times.
Great job, like trying to break it down simply. So, but still, it can be quite a challenge. I know you focus
Yes.
on like bonds and futures and stuff like that too.
Yeah, exactly. I mean, and like for one of the things, I run a women's group called Women of Wealth, and like my like mission in life, really like my dharma is just to have more women steward more global wealth. Period. So like everything I do at this point in my life is about helping women get to that point. And most of it is confidence based.
Yeah.
And like this whole discussion about whether it's macro or like the I'm not good at math, no, that's BS. Like it's really, a lot of these concepts are so complicated on purpose. And, anyone listening, if you don't get it, I don't get it either most of the time. I'm like, I have to come back to this. And then I have to like, watch like an instructional video or like rewatch Ray Dalio's How the Economy Works video, because it's so easy to get overwhelmed by all the other little mechanistic things that happen. So if you feel bad, don't, because we're all in the exact same boat. And I'm pretty sure that these people running it up at the top, they're also confused, which is
Yeah.
why everything's a mess, because they lost track. They're like, I don't know what's going on anymore. Let's pull this lever and let's like, do weird tax cuts in the UK. And then everyone's freaking out. And like, it's really makes you wonder, makes you feel better about yourself, because I think they don't know what they're doing either.
So true.
It is true.
Yeah. You're like, oh, tax cuts will boost the economy. And then the pound crashes. I do want to get back to the Women of Wealth thing here quick, but I have a quick question before that. And that is just like, we obviously raise money from investors and things like that.
We do?
Yeah.
I'm just kidding.
But obviously you guys do too. And I was just wondering if like during this time, have you had to raise money recently? And if so, have you seen some people kind of shy away from investing in real estate because their stock portfolio is doing so bad? Or what have you seen?
Yes and yes. So we are currently in the middle of a raise that I can't talk about because it's 506B, but it's been a challenge. So we raised one in July, I want to say, which was, I would say, like June was like the height of the emotional crash. It was like, I could really tell it was like scaring people. And so then we had a deal to raise in July. I'm like, okay, probably the worst time ever. Plus it's the summer, plus like all these things. But, relative to the 2 years prior where it was so easy to raise, it's much more challenging. And it's because people are feeling that wealth effect, to your point, like the stock market's down, my portfolio is down. And inflation is way up. Things are so expensive. So it's not just the wealth effect from, seeing our portfolios down, but it's actually like real life, like, man, did like those groceries just cost me $100? Like I have to be back in 3 days. Like we feel it. And then the headlines don't help also, which is why, Peter Linneman is one of the foremost real estate economists. And one of the things that he says, he's like, if you want to feel better and know more, is don't watch CNN or Fox or any of it. Just stay away from Wall Street Journal, all of it, because that's not where the data is. And so all of that, yes, it's much harder. People are feeling it. And because we have this more hands-on approach with our investors, like I've been doing a lot more calls. I've been doing a lot more traveling to meet my investors, sort of like old school, like really bringing it back old school, like dinners. And we just had we do a virtual investor day every year. So like a 3-hour event, and we had all of our operating partners on, and we actually had a Keel on, the macroeconomist. And so we're just trying to do more outreach, more kind of like open office, like so that people can talk to us more and express, because everybody's feeling this fear. And this is that whole, the fear and greed thing. And I can't remember Warren's Warren Buffett's quote exactly about be fearful when others are greedy and greedy when others are fearful, but it's so hard to do.
Yeah.
And so it's a challenge. And a lot of other people that I speak to that raise capital, like not just in real estate, even financial advisors that I know, they're saying like we're talking to our clients off a cliff right now, like off a ledge. Like everyone's having a really challenging time. And that's why I think once we get some level of stability, like it was really great to hear our sponsors on the call yesterday on our event because they were all saying the same thing. We just need to wait for a minute because that right now there's too much uncertainty. And so nothing is moving. And then when we start to get some certainty with rates, with where we are, then people will start to trade again. Because it's not that people don't want to invest, but they're feeling like maybe now is not a good time. So you just have to work a little harder to help them get over the fear and the uncertainty and the discomfort.
Absolutely. Totally agree with that. Yeah. I was just checking out. I love to just hear
Yeah.
from every other people who raise money just to see where they're at and everything.
I was going to ask about women in wealth.
Yeah. Yeah. So, I was going to say, before we get into the 4 questions at the end, because we are getting toward the end of the show, I'd love for you to share more about the Women of Wealth. I know you kind of touched on it a minute ago.
Yeah.
If you could just share more about that, really plug that, that'd be awesome. I think it's really
Yeah. Yeah. So Women of Wealth started as like a 2-person mastermind with my co-founder, Jennifer Burnham Grubbs, and she owns her own insurance brokerage and has for a decade. And we found ourselves a few years ago being like the only person I knew in my life, only other woman in my life in a friend circle, I suppose, that was in the finance space or just wanted to talk about it. None of my friends knew what I did for a living because I was ashamed and I was afraid that they would judge me for wanting money. I mean, there's so many negative, and this is what I learned really over the past few years is noticing in myself, like there's a lot of negativity for women around money and it comes from all these different places. And I've been discovering it in myself. And so we decided to start Women of Wealth, just thinking like maybe a couple women want to join this mastermind, have these conversations regularly. And so we launched it at the beginning of the year and we actually filled it in 2 weeks without it.
Wow.
Because we were like, whoa, okay, I guess people want to talk about this. And so it's really, and now we've structured it as a nonprofit and we're doing financial literacy programming for women's shelters and also for like schools and just having like, that's the nonprofit piece of it. And then there's this like really intimate mastermind piece for women who just want to really talk about and master this idea of wealth. And a lot more comes out of it from that, but like passive income being like a primary piece of it, right? Which comes from real estate, because my whole saying is it's like it's time to stop working for your money and put your money to work for you.
Yep.
Like the fairy godmother of passive income that just gives you the money that you want to do the things. Because when we have that solid like other piece of income or however much it is, right? It's that we're actually freed up to do more. And so we workshop ourselves. We have presentations, we check in, everybody's working on different things. And I've seen immense transformation in some of the women who didn't even know they didn't know what passive income was. And now we have this like thriving group and we bring in more and more members as we open it up a little bit more. And it's really just a place for women basically to claim their birthright to abundance and to do something about it. Because I'm not interested in just talking. Like I love to talk, but I really want it to be like, let's go do it. Like we invested in a private equity deal together, like we did some Bitcoin stuff together. Like there's all these different things going on. And even just for those that, and it's not, a lot of the women aren't in finance. Some of them are, and some of them aren't, but just having that community to speak to or ask a question to, and this real estate is like the number one topic in the group of where they want to have and grow their wealth, because we have a lot of work to do to be able to be those stewards of global wealth.
Yeah. And you know what I love? Like society has made it so like when women create, it's either like babies or a home. And so like when you open up a space to create, allow them to be creative, to think about what they want to create, like that's huge too, because there's so much more to life for women than those two things. And
Yeah.
so I liked how you worded that. Like they do have space to create, and that's phenomenal because when they have more options to, the topics and the conversations just completely change. And that's really amazing to me, actually.
Yes. And they do create. And it's honestly, it's all about confidence. Once you have the confidence, then you're like, why did I ever think I couldn't do this? And that's the moment for me where it's like, where when we were vetting some deals together, they were like, oh, I can do this. I'm like, yeah, you can do this. And so like some of them are off like doing all their own other things. It's crazy. It's amazing. I love to see it. But that confidence leads to possibility of, oh, well, maybe this thing that I didn't think I could do. Well, now I can do it. And I've created a financial structure around it to allow me to do it. And then they go off and do it.
I like that.
And then it just, then it's, you can't stop it.
Yeah.
Like you can't stop it. And that's what's really wonderful for me to see. And like, I'm here for it. Like all of my like burnout, all of my spiritual awakening, like all of my stuff, it's not in the book because a lot of this actually happened after, where I kind of woke up and I was like, this is what I need to do. If I'm ashamed to talk about money and I do what I do for a living, something's got to change. And like, I just had this really powerful moment where I realized like, this is what I'm here to do. And my 18-year-old self that was like, I want to be independent. Don't tell me what to do. I'm going to make money. Everything I learned in finance brought me to this point where I can speak to it with expertise humbly about what we can do together. And yeah, so just a long way of saying like that's my purpose in life.
No, I love that. Thank you for sharing that. That's amazing. It is.
So cool. So thank you again so much for sharing about the Women in Wealth and everything else about the economy. And I've had this really great conversation, but it is getting towards the end of the show, which brings us to our adventurous four. It is a 4 exploratory questions we ask all of our guests. So if you're ready, AdaPia, we will start the questioning.
I'm ready.
So the first question we have for you is, where is one place you wish to travel to and why?
I really feel called to travel to India with all of my like yoga studies that I've done over the years and Ayurvedic studies. And I really like that is one place I'm called to. And I want to go with somebody that's from there because I really want to go with, and I know people that are like, come with me next time. And I'm like, I'll be there. So that is my next place in travel.
Very ready. I like that. And then our second question is, what is something on your bucket list and how are you leveraging real estate investing to achieve it?
Okay, so I have wanted a cacao farm, not a cow farm, a cacao farm, like chocolate trees, since I went to Costa Rica in 2012. And I'm traveling to Guatemala to a cacao farm that's also a regenerative impact center run by some women. And I'm probably going to invest and help them build that business and get them to be fully self-sustaining and buy it from me. It's this like whole, like, again, kind of a thing. So that is the cacao farm has been like 10 years in the making, but it's also coming along with this women's empowerment business, regenerative impact center in Guatemala. And I'm going in November.
Yay! That's exciting. That was cool.
It's like next month. Yeah.
Yeah.
Maybe by the time this podcast.
Yay.
Already October, right? Yeah, that's cool. So the third question we have for you is, what is one piece of advice for someone who wants to start passively investing in real estate?
Oh, yes. Okay. So there's like a bazillion articles. Find the ones that really resonate with you and then call the person who wrote them because they're probably somebody that has syndications and talk to them. Like you can do all the learning. Like I think it's really important, even passively. It's not just like, oh, here's my money. This is not the 401k mentality. Like passive has some active at first. And I would say people interested, get familiar with the terms, know what your goals are, and then call the people that are offering that advice or the syndications. And if they don't want to talk to you, red flag, walk away. I mean, you know, when you're talking to your investors, like you can't just like brush them off. Like that's like a super red flag for me. So that would be my advice.
Great. Because we all started at the same beginning. So
Yes.
nice when other people remember that as well.
Mm-hmm.
And then our fourth and final question is, if you had unlimited resources available to you, how would you leave an impact?
Oh, I would just like totally blow up everything that I'm currently doing. If I had like unlimited resources, I would just be a constant roadshow for empowering women to build wealth and invest because that's the impact. To me, generational wealth, I don't have kids, but to me, generational wealth is like all the generations that come after. And that starts with more money in the right hands. And we just need to shift that money because there's a ton of it and we just need to shift it. And then that is the impact and the legacy that I want to leave.
I love that.
I do too.
Well, thank you so much, AdaPia. I appreciate it. Before we end the show, would you mind sharing with our listeners how they can learn more about you and maybe the Women in Wealth as well?
Yeah, thank you. So it's really, I use LinkedIn the most. So you can find me on LinkedIn. Just, type in AdaPia, AdaPia, and I will come up. Women of Wealth is with an X. So WOMXN of wealth.com. But usually I just tell people to message me on LinkedIn and, we can have a conversation and just take it from there.
Yay.
Absolutely.
Well, thank you for joining us today. It has truly been a pleasure. And I'm just so glad that we got to spend this time together. So thank you again.
Thank you so much. Thanks for having me.
Absolutely. So until next time, explore more, adventure awaits.
Woo!